Good evening. I hope you all had a great Thursday. We've almost made it to the weekend. Today the market fell after the bad jobs and GDP data, but recovered some of the gains throughout the day. The Dow dropped 0.85%, while the S&P fell 0.37%, and the Nasdaq actually had a gain of 0.43%. The US took the largest hit in quarterly GDP ever this past quarter, but it happens to not be as bad as estimates. Second quarter US GDP fell 32.9%, while economists were predicting a drop of 34.7%. Mark Zandi, chief economist at Moody's Analytics, said, quote, "It's a very deep and dark hole, and we're coming out of it, but it's going to take a long time to get out," end quote. Personal consumption, which commonly makes up 2/3 of US GDP and is the largest proponent of US GDP, was responsible for 25 points of the 32.9% drop. Of the 32.9% decline, personal services spending contributed 22.9 percentage points, while healthcare accounted for 9.5 points. Healthcare spending fell due to hospitals restricting elective surgeries, and spending is expected to come back. Spending on services isn't likely to experience the same fate. The Personal Consumption Expenditures Price Index dropped 1.9% after previously rising 1.3% in the first quarter. Personal income skyrocketed by sixfold to $1.39 trillion due to the government transfer payments, while disposable income flew up 42.1% to $1.53 trillion. Note that GDP growth figures are routinely annualized, which exaggerated the hit in the second quarter. The 32.9% fall in GDP was closer to 9.5%. U.S. weekly jobless claims came in lower than expected, but still managed to rise for the second straight week. Weekly jobless claims totaled 1.434 million, while economists were expecting claims totaling 1.45 million. Continuing claims rose by 867,000 to 17.018 million for the week ending July 18th. Data from the private sector is showing that business activity has begun to plateau or even gone into reverse, which makes sense given the weekly jobless claims. Peter Bukvar, Chief Investment Officer at Bleakley Advisory Group, said, quote, "The level of claims still remaining elevated and the rise in continuing claims definitely reflects the reclosings over the past few weeks that we've seen in some states where the virus has flared up in. Bumpy and uneven will be the economic recovery until we have a vaccine where most of the world is mass inoculated," end quote. Economists are most worried about the job market and the effect that it will have on the ability of the economy to bounce back. As people are unemployed, there is less spending, and thereby being less corporate revenue and profits, which slows down the process of hiring. One economist said that it could take 3 to 4 years before we reach levels that we were at during the start of the year. Gregory Farnello, head of U.S. rates at AmeriVet Securities, said, quote, "The job market is very weak. The risk is, if they don't provide some underpinning here, we'll risk losing more jobs going forward," end quote. Economists are most worried about the stalling out of jobless claims, indicating that we aren't quite on a road to recovery. Only 2 sectors ended in the green today, which happen to be consumer services and tech. Oil and gas had the worst day by far, as there are fears of a fall in demand due to rising coronavirus cases throughout the world. Value was hammered today, while core stocks were weak as well. Growth did well, as the tech sector was one of the only 2 sectors that ended in the green. The biggest gain in the S&P 500 came from Apache Corp, which had shares gain a huge 17.29%. This move comes after the hydrocarbon exploration company beat on both bottom and top line estimates. The other big day came from Qualcomm, which is a semiconductor and wireless technology company, who had shares fly more than 15% today. This comes after the company beat on both bottom and top line estimates, and more importantly, announced a settlement with Huawei. This news caused price targets on Qualcomm to be raised to around $120 per share. The biggest loser was A.O. Smith Corp., which is a manufacturer of water heaters and boilers. Shares fell 8.67% after the company reported a double beat today, but clearly they did not meet investor expectations. The other loser was hydrocarbon exploration company Occidental Petroleum, which had shares fall 7.4% due to fears of a fall in oil demand due to the rise in virus cases. Getting into earnings, we'll start off with United Parcel Service, ticker symbol UPS, which is the package delivery and supply chain management company. UPS posted fantastic earnings this morning. They beat non-GAAP EPS estimates by a whole $1.05, as they recorded a gain of $2.13 per share. Revenue came in at $20.46 billion, which is an increase of 13.4% on a yearly basis, and beat estimates by $3.04 billion. UPS CEO said, quote, "Our results were better than we expected, driven in part by the changes in demand that emerged from the pandemic, including a surge in residential volume, COVID-19 related healthcare shipments, and strong outbound demand from Asia," end quote. Domestic volume surged 22.8%. They also had business-to-consumer shipment growth of 65.2%, amid demand for residential delivery. Investors love this news, and shares ended the day a great 14.38% in the green. Next up, we have Mastercard, ticker symbol MA, which is a large credit card company. Mastercard beat estimates this morning, but it was nothing all too significant, especially when compared to UPS. Mastercard beat non-GAAP EPS estimates by 18 cents, as they recorded a gain of $1.36 per share for the quarter. Revenue fell 19.5% as the company beat estimates by only $40 million and finished the quarter with revenue of $3.3 billion. Mastercard CEO said, quote, "Our platform uniquely positions us to support the shift to digital across consumer and business payments that has been accelerated by the COVID-19 pandemic, including an increase in consumers' preference for contactless payments," end quote. Shares started the day in the green, but ultimately ended in the red, but only by 0.10%. Next up, we have Procter & Gamble, ticker symbol PG, which is a company that produces a wide variety of consumer goods, such as Gillette, Old Spice, and Crest. P&G had nice earnings this morning as well. Non-GAAP EPS came in above estimates by 15 cents, as they recorded a gain of $1.16 per share. Revenue grew by 3.5% on a yearly basis, as they recorded revenue of $17.7 billion, beating estimates by a nice $730 million. This was the largest sales growth for P&G since 2006. Shares ended the day up 2.42%. Next up, we have Kraft Heinz, ticker symbol KHC, which is the food company that owns brands such as Jell-O, Kool-Aid, Capri Sun, and Planters Peanuts. This morning's earnings were strong, as they beat on both bottom and top line estimates. Non-GAAP EPS came in at a gain of 80 cents per share, which beat estimates by 15 cents. Revenue was up 3.7% on a yearly basis, as they recorded revenue of $6.65 billion, which topped estimates by $110 million. Shares started the day in the green, but ultimately fell victim to the sell-off today, as shares ended down 3.32%. Next up, we have Comcast, ticker symbol CMCSA, which is a large telecommunications conglomerate. Comcast followed suit with others, and also posted a double beat. Non-GAAP EPS came in at a gain of 69 cents per share, which was better than estimates by 14 cents. Revenue was down 11.7% on a yearly basis, but still managed to come in at $23.72 billion, which beat estimates by $160 million. The company announced that their new streaming platform Peacock managed to get 10 million subscribers, which exceeded their expectations. Shares ended the day down 0.52%. Next up, we have Amazon, ticker symbol AMZN, which is known for its e-commerce site, but also has operations in cloud computing, digital streaming, and artificial intelligence. Amazon completely obliterated estimates today. They beat EPS estimates by an enormous $8.80, as they recorded a gain of $10.30 per share. Revenue rocketed up by 40.2% on a yearly basis, as they recorded revenue of $88.91 billion, which beat estimates by $7.62 billion. Amazon Web Services, which is their cloud and AI segment, missed revenue estimates. Shares are up more than 5% after hours. Next up, we have Apple, ticker symbol AAPL, which is the largest American company in the world. It is known for its wide array of hardware and iOS and macOS software. Apple announced a very strong beat on estimates this afternoon. Non-GAAP EPS came in at a gain of $2.58 per share, which was better than estimates by 51 cents. Revenue was up a phenomenal 10.9%, based on strong iPad, Mac, and iPhone sales. Revenue came in at $59.69 billion, which was better than estimates by $7.13 billion. On top of this, the company announced a 4-for-1 stock split. Shares are up nearly 6% after hours. Next up, we have Alphabet, ticker symbol GOOG, or for their preferred stock, GOOGL. Alphabet is known for their Google search engine, but also has segments in cloud computing, software, hardware, and online advertising technology. Alphabet had strong earnings, as they also beat top and bottom line estimates. EPS was a gain of $10.13 per share, which was better than estimates by $1.94. Revenue was $38.29 billion for the quarter, which beat estimates by $950 million, but did fall 1.7% on a yearly basis. The company also notes it's authorized $28 billion more in stock buybacks. Shares are basically flat after hours. Lastly, we have Facebook, ticker symbol FB, which is the social media conglomerate that also owns Instagram and WhatsApp. On top of this, they have operations in artificial intelligence and hardware. This afternoon, Facebook blew away estimates. EPS came in at a gain of $1.80 per share, which was better than estimates by 40 cents. Revenue managed to be up 10.7% as they recorded revenue of $18.69 billion, topping estimates by $1.33 billion. To top off these strong numbers, they also beat estimates for daily and monthly active users. Shares are up close to 7% after hours. What a day by the big tech giants. This shows as to why they had to appear on Capitol Hill yesterday. That is all that I have for tonight, though. Hope you enjoy the rest of your night, and I'll see you all again tomorrow.